Okay. All right. Okay, ready?
Yes, sir.
All right. Hey, everybody. It's Sean and Paul here from Better Call Paul. We are doing our second live stream video together. We were going to do one about a week ago, but Sean broke his toe at work and he was out of commission. How are you feeling?
Yeah. I'm doing okay. It's been about 10 days now. The toe is still pretty swollen. It's a little bit hard to walk, but I did for the first time in 10 days, I wore a regular pair of shoes instead of my flip flops to work.
Right on. All right, guys. So Sean and I are going to grab ourselves a beverage. And if you guys all want to grab yourself a beverage, go ahead, get some coffee, some tea, whatever you want. We're having our favorite drinks. So we're going to crack these open. All right. Have a little taste.
Cheers, Paul.
Cheers.
Make sure you look at me in the eye.
Oh, people won't understand that.
No, no.
Okay, so for today's video, Sean and I have prepared 3 questions each, but I don't know his questions and he doesn't know my questions. We're just going to take turns and we're going to kind of start a conversation that way. So, Sean, if you want, you could go first.
Absolutely, Paul. I'd love to ask you a question first. Um, I'm going to start you off with a nice softball question here. Paul, what got you interested or started in covered call ETFs?
That's a good question. Well, I guess it all goes back to 2020 when I decided to take over my own portfolio and become a DIY investor, and started watching YouTube videos because up until then I was just invested in mutual funds. So I opened up my brokerage with RBC and started watching YouTube videos, and of course I knew about like bank stocks and Suncor and oil stocks and things like that. But once I started watching videos, I realized, mostly thanks to our good friend Adriano from Passive Income Investing, that covered call ETFs were a thing. And that's how I got interested in them. And I did try a lot of other stuff. I had REITs, I had closed end funds, I had split corps. I tried a little bit of everything, and slowly but surely, I decided that covered call ETFs was the way to go for me.
Oh, excellent. Very good.
How about you? Something similar?
Uh, it is something similar, but I've been thinking about when I was writing down these questions for you, I was thinking about my own scenario. Um, I think for me, it's a patience thing. Um, I'm a little older, 53. Waiting for a growth stock might not be in my best interest being 53. Um, and really, every month I wanted to see an increase in my portfolio. And the way I felt was with investing in growth portfolio, I couldn't see that every month. But when I started investing in covered call ETFs, every month I saw a jump in my portfolio, whether when I was fresh starting out and I was only getting, $20 a month to now where I'm now over $1,000 a month. I see a progression and I see an advancement in my portfolio. I see every month bigger numbers. And to me, it motivates me. It really makes me happy to see that. I find myself trying to penny pinch almost in the rest of my life so I can put all the money I can into my portfolio to grow it every month.
So you're more focused on growing the monthly income, not necessarily the size of the portfolio.
Absolutely. I love seeing it. Last month was or this month in the distributions, seeing $1,000, over $1,000 a month coming into my account. I'm so excited for it. I love seeing it grow like that every month. Waiting for retirement so I can use this money.
Yeah, you know what? It's definitely addictive and motivating for sure. Okay, so my question to you, and I'll set this up a little bit. Back in December, my portfolio hit an all-time high of 388,000, and then between then and April, it crashed to 292. So I dropped $96,000, and people will be happy to hear this, but I've recovered to new all-time highs, and I'm at 443,000. And
Huge number.
so since April 8th till today, I'm up 151,000, which,
Wow.
people will say, covered call ETFs don't go up in value. We're only losing money, all the NAV erosion scenarios. But I'm assuming your portfolio is probably hitting all time highs as well. And personally, I'm a little bit nervous because I'm looking at share prices. Everything's up, everything seems to be high. And I feel like there's going to be a pullback, some kind of a correction. So, with all time highs like this, what's your strategy moving forward?
Ooh, I was thinking about that today, and actually, it's one of my questions for you later. um, at some point, with the way the markets are nowadays, do we start hoarding a little bit of cash? Maybe half of our distributions every month, maybe a little bit more than that, to hoard for the pullback. I think there's a pullback coming. I definitely do. Everything is so up right now, and we're living in a good lifestyle right now from this. My portfolio today hit an all-time high of it was like 53,800 and some change. I was ecstatic. I was looking at it and I was like, wow, I'm impressed with it. But I think with the next couple of months going by, I think I'm going to reinvest half and maybe keep half cash in my portfolio, just waiting for a bit of a pullback so I can jump on some of those really juicy distributions.
Yeah. If my memory serves me correctly, last year in October, whenever my portfolio was up that particular month, I lost half of it on the last day of October. So there was that much of a pullback in one day. So I'm thinking about kind of like maybe saving some distributions, at least for the next 2 or 3 weeks, and see what happens. If nothing else, at least for a couple red days. But that's what I'm thinking, the same thing as you.
Yeah, definitely. Actually, this is going to lead me into what was going to be my last question, but I'm gonna move it up to now.
Yeah.
Um, Paul, how do you decide when how much is enough? When do you start to put away cash because your portfolio is much larger than mine, almost 10 times the size? When are you going to decide that it's time to um, keep a certain amount of dollars aside in cash every month,
Hmm.
and how much to invest every month so you can? I know you're semi-retired, but when are you going to start to look at I'm going to keep, because you're at about $10,000, $11,000 a month. When am I going to start to keep $7,000 cash out and only reinvest 3 or 4 thousand so you can vacation, go on cruises like we're doing this month? How do you feel about that?
That's a good question. Um, part of the problem is with I guess the tax structure in Canada. When people ask me, "Oh, you're making 10 grand. Why do you still work? Why do you still do this and that?" But part of the problem is that a lot of my money is tied up in my RSP, and if I start taking that out as cash to kind of like set aside, I'll end up paying taxes on it, right? So I'm going to have to. So in a way, you kind of got almost cut half of my portfolio out. I guess maybe that's the half that I could save, and then I'd
Yeah.
only be taking money out of my TFSA, which I still want to reinvest a little bit as well. But currently, I am taking out the $1,000 a month from my RBC TFSA. That's part of my case study. And then for my cash account, I'm pulling out the $600 a month that I make in my cash account, and I'm kind of putting in that in my Wealthsimple checking account. I'm trying to squirrel away a little nest egg for emergencies in case I run out of. Well, I just got my last paycheck from work and my vacation pay, so I think come maybe I guess November, I'm probably going to have to start pulling more money out of my accounts to pay my bills. So
Okay.
yeah,
What,
definitely sooner
while we're
than
on
later.
while we're on this topic, actually, one other question for you. So you sort of touched on it. What percentage of your portfolio is in your tax-free accounts versus personal accounts or RSP accounts?
Yeah, my tax free savings account makes up about say 50%, and then my RSP is like 44%, and my tax free savings or my cash, my non registered cash account is the other 6%.
Okay.
So it's about that, yeah.
Yeah, myself, I'm about 70% in my TFSA, 30% in my RSP. I have $0 in crypto now. I've cashed it all in. And I have $0 in my personal account, or I think there's like 8 cents in my checking account for in Wealthsimple. But I'm because I haven't maxed out my TFSA yet. Every penny is going into my TFSA until I get it maxed out.
Yeah.
This year, I'm already just over $8,000 into my TFSA this year, which I'm really happy with. And with the end of the year coming up and Christmas bonuses at work, I'm hoping I'm going to have about out of my out of my personal bank account, I'm going to hope I have about $12,000 to $13,000 invested into my TFSA.
Yeah, that would be good. That would be really good. Okay, question number 2. Have you seen any of Ben Felix's most recent videos about covered call ETFs?
Begrudgingly, I did watch
the first one,
maybe half of it.
Yeah.
It started to anger me a bit. It really did. Not so much for what he was saying. What really angers me is, and I think I posted something about this before, is why can't the growth bros leave us alone, and let us covered call ETF people or investment portfolio people leave us alone and let us enjoy the way we do things. We're all after, how I feel anyways, we're all after the same end game. We all want to make money. How we're doing it, for me, because I'm a little older, I don't think trying to grow my portfolio through the Magnificent Seven or anything like that is the best idea for me, because I'm older. I don't have the time to wait. I want to be retired in the next 7 years. So I could only watch half of it. I did watch Adriano's rebuttal video.
Yeah.
And I loved his rebuttal video. He's extremely intelligent. He's very articulate. He knows what to say. But that's just how I feel about it. I just wish they could be happy for us, like I am for them. I don't have anything against the way they do things. How do you feel about it?
I think Ben really is an intelligent guy, obviously. I mean, nobody can question the fact that he's a very smart guy. And if I had $5-10 million, I would probably be sitting down with Ben like, hey, I have this money and I need you to help me manage it. Right. But I don't think Ben deals with guys like us who have small portfolios. You know what I mean? I think he's in Toronto taking care of rich people, and it's a totally different way of investing. Right.
Yeah, absolutely. If you had $5, $10, $15 million, you'd be happy with a 5 or 6, 8% return on your money.
Yeah.
Why not? It would make it grow, right? But I'm not at that stage. That's not where I am. I need more investment. I need more money. I need more return.
Yeah, and capital preservation becomes key when you have large sums of money like that. But also, I was talking to a friend of mine in town. He's an older gentleman, and he was telling me how he's, putting all of his investments together at one institution because he's worried about passing away. He wants to leave everything simple for his wife and his son. But he was also mentioning that he had some money come due or whatever, and I think he's with a bank, and they were helping him invest this money. And he was so happy. He put it into a GIC at 3.3%.
Oh,
I'm thinking this is the wonderful advice you get from a professional, advising you what to do with your money. And I'm like, John, that's barely covering the cost of inflation. But it's safe. That's what he told me, but it's safe. Like, you know what? It's not my place to tell him what to do with his money, but I just thought that's crazy.
It is
3.3%. It's nothing. But that's what people think, right? They go to the bank, they get told by an advisor that this is what you should do, and the money's safe, and so that's what they do. Which I think
in reality, the cost of inflation is eating all that.
Yeah,
making his 3.3% worthless.
I mean, I'd rather be in my shoes than his. That's for sure.
Absolutely.
So
absolutely. All right, I'll ask you another question, Paul.
Yep.
There are so many covered call ETFs out there. How do you decide which ones make the cut for your portfolio? Did you have the same question?
That's the third question I have for you. I had a very similar question.
All right.
You know what, Sean, you're right. There's so many out there nowadays. It's so hard to choose. And, you go on Blossom or you go on YouTube and you see people talking about so many different ones. And I even get messages on Blossom, people asking me a lot about like the Granite shares, ETFs in the States. I think they're two times leveraged. And
Oh wow.
I just draw the line at certain things like that. For example, I don't need two times leverage is going to be great going up, but it's going to be bad going down. And I think
It's gonna
that's
hurt.
more for swing traders, right? If you know how to swing trade it properly. And I'm sure people are making a killing on it right now because the market's up. But what happens when it crashes, right? The two
Yeah.
X leverage ones they're gonna get killed.
Oof.
Um,
Ouch.
so, but yeah, I mean, to answer your question, I've been doing this for 2 3 years, and sort of slowly accumulated funds over time, like HYLD and ENCL are some of my like old ones, but I like to keep them because I feel safe about them. And then as new ones come out, like the harvest funds, you kind of got to pick and choose which ones you like, which ones you feel comfortable with. I tend to try to go with the ones that pay a little bit more, like your MSTE and CNYE, PLT, right? I try to go with those higher ones. And then, of course, I'm interested in the Hamilton's bi-monthly payers, and they're also, a little bit higher in yield. So yeah, there's lots of things to consider for sure when picking, but you can only have so many. I mean, I guess you could have as many as you want, but I think to be reasonable, you have to keep it to a certain number. I think I'm over 40 right now, but I
Yeah.
was I was going to ask
40.
you. I was going to ask you sort of like what are the top things you consider when buying an ETF? So, or what is the top thing you consider? Like, do you look at the payment frequency? Do you look at the underlying assets, or what sort of same question? Like, what do you use as a deciding factor?
I do have a couple of things that I really decide on. Definitely the yield makes a big difference for me. Being that I do have a smaller portfolio and I really want to try to build it quickly, um, but not too quickly. Yield, the which company I'm buying, like Harvest. Obviously, I'm big into Harvest. I love their quality of their products. Um, they seem to really they really seem to be hitting home with what I want as an investor.
Mm-hmm.
A good yield on a product. The price points they come out at are always right. I find I can buy more shares of what they're selling for the amount of money I have. Um, Also, the underlying product, oh, there's so many of them. Like, oh my gosh, pick a company, they have it for it, right?
Yeah,
For the single stock ETFs. I really enjoy it. But also, one of the things I really appreciate and I am doing is I bounce ideas off of you.
yeah, yeah.
you know, for people who may be watching the video for the first time here, Paul and I have a little group chat. Um, there's four of us in the chat: Paul, myself, and two other friends, Mike and Jeff, and we will put ideas into our little group chat. We say hi to each other every day. Let everybody know, hey, there's this out, this is new. Is anybody thinking about investing in it? And it's because Paul is been doing this longer than everybody, than myself, than Mike, than Jeff. So we can all learn a little bit from each other. Jeff, as a newer investor, he'll kind of throw some ideas at us, ticker symbols maybe we've never even heard of before. So I know I've gone to had to look at a few that Jeff's throwing out at us. But I do like new products. When something new comes out, I like to jump on them. Whether I can only afford 10 or 20, or maybe if I'm lucky enough, a distribution just came out and I can buy 100 of them. Like all the new ones that just came out from Harvest, I'm up in all of them because I got in right away.
Did you buy the four new ones?
I did buy the four new ones, yeah.
Nice.
I think I'm up in 3 out of the 4. I'd have to check but I'm 100% sure I'm up 3 out of the 4 of them, which is fantastic. I love it. They all have a great distribution every month for them. And this week being distribution week, looking forward to adding to all of those positions.
I didn't buy any yet. I chickened
No,
out.
Bad pull. Bad pull.
I literally chickened out. I didn't buy any. I am hoping though, and I think that Harvest will add all four of them into HHIS. Right? I think that's the plan is to add them in, and of course now they have to compete with Evolve's Biggie, so
Yep.
they're gonna add them in, and I think they're gonna increase the distribution. And I was calculating it for every cent they increase the distribution, I'll get an extra $47 a month.
Oh wow.
Yeah, so
Nice.
I'm excited. I'm hoping for 5 cents. That's my wish.
Oh, that
Yeah,
would be fantastic. I would love it. That would really make up for the 5 cents that Misty gave up the other day or
that's
a couple months ago.
that's right. That's right. So
Yeah,
that
it put me right back up there again.
yeah. Yeah. How do you feel about the 25% leverage that a lot of these companies are using now?
I like the 25% leverage. I like the 33% even more.
Yeah.
Um, I get it. We might see a little more swing and volatility, but heck, that's what we're investing in, right? The volatility is great for guys like us.
Yeah.
I love it. It's not something I 100% look for is the 25% or the 33%, but I do like the leverage on the investments.
Yeah. Do I just had a thought there for a second and I lost my train of thought. That's shoot. What was I going to ask you? Hmm.
All right, I'm going to ask you one more then while you're thinking.
All right.
I wrote down a few. So, if someone is new to this type of investing, what's the best advice you could give them?
Well, first of all, I like to make sure that the person's kind of like doing it for the right reasons. You know what I mean? They're not just a 18, 19-year-old who wants to start following what we're doing because they see how much we're making every month, right? So I try to make sure it's the right product for them. And to be honest, if they're that young, I kind of try and steer them in the direction of like an XEQT, FEQT, and maybe a little bit of covered calls, as well. But
So
for
a
some
little bit of a hybrid.
yeah, yeah. But for somebody who's, I like to say, over the age of 40, maybe over the age of 50, who wants to do this, my number one suggestion is start slowly, right? Don't just grab 100 grand and dump it into covered calls because you don't really fully understand how they work yet. And if the market drops 10% next week, you might panic, you're going to be upset. So I always say go slow, pick a couple of ETFs, start building positions in them, start collecting the monthly distributions. And when you kind of get a feel for it, then you can, pick and choose a few more that you want to add to your portfolio and keep growing it that way. So kind of go slow, get your feet wet a bit before you jump in, head first.
Absolutely. If anybody asks me which one, I always tell them HHIS is always a really good one. Because I know with the wife Anna, she always worries about this, right? The roller coaster ride of the prices of the underlying asset. And I tell you, don't worry about that. It is a roller coaster ride. It's going to go up, it's going to go down. But I think in probably I'm about 90, maybe 92% of all my positions, I'm up money in them.
Nice.
Yeah, not even including the dividends or the distributions or anything. The actual underlying price of them, I'm up money in all of them. Anywhere from two to I have a couple that I'm up in double digits.
Yeah.
And I always tell anybody who's trying to start out, like you just said, pick a couple. And if they ask me for my advice, I'm just like, tell them right up front, I'm not a financial advisor.
Yeah.
I said, these are just the ones I like because they're very stable. The distributions are really good. So I just give them a couple,
Yeah.
One I have been loading up on because I really like it is the TSLY.
Yeah.
Um,
Ironically, you're not a Tesla fan.
I'm not. I absolutely hate electric cars, and I work at a car dealership, but I'm not a fan of electric cars. I like my gas car. I like to go in and be able to fill up in 3 minutes.
Yeah.
But it's been a good performer for me in the last little while. Elon Musk with his trying to drive the share price up because he's been buying shares himself. It's been a great performer for me. I think in the last In the last 2 months, I think I've doubled my position from 250 to 500 shares.
Oh, wow.
Yeah, I'm really liking it, and I'm making really good money on it.
I'm just checking my phone here because I know I bought it when it came out at 12 bucks and it hit a low of $5.21.
Oh,
But for anybody who loaded up at that price, you're making a killing now,
oh,
right? If anybody
absolutely.
who bought it under $6 and now it's now it's 9.52 plus all the distributions, yeah, definitely making a killing. You're right on the Tesla one. I have quite a few of these as well. I remember the question I was going to ask you. Have you or are you thinking about trimming any of your positions? What I did was my PLTE, I was up 70%. So I sold 100 shares and it was 70% plus $400 in dividends. So
Yeah,
I sold 100 shares. I assumed that, it would drop eventually and I could buy back in. So I decided to trim that position.
definitely. Just on that one thing on that TSLY, my average price is 745 right now.
Oh, nice.
So I'm up over $2, which is what just shy of 28%. I'm up on it. Plus all the distributions I've had for many months.
Yeah.
But as for trimming some of them, I actually started trimming a few. I've had a couple. I think it was ENCL that it just last month broke over what my cost basis was,
Yeah.
and I had several hundred shares, so I trimmed half of it and bought something that was higher. A lot of MSTE.
Yeah.
Up to 838 shares in that. I think this month with the distributions and extra money I'm going to put in, I'm going to try to get up to 1,000 shares of that.
Nice. Is that your
Yeah,
largest
I'm
position?
down. What's that?
Is that your largest position now?
It is. Yeah, I have 838 right now. I'm down 12%. So for me, it's a great time to buy.
Yeah.
I'm down money. I can lower my cost average on it,
Yeah.
which I'm a big fan of. Every month before I go and buy anything, I always go through my portfolio. I look, what I've lost money on my cost basis. And I'm actually looking at, I have 20, what do I have? 24 different positions. I'm down in three.
Wow.
But one of them we won't talk about because it's GME. But even the other two, ENCL, I'm down 2%. MSTE is my biggest one. I'm down 12%. So
Yeah.
that's going to be my biggest buying opportunity.
I would bring it up to 1,000 shares, and then once you get to 1,000 shares, just start working on something else.
Absolutely. Yeah,
Yeah.
definitely. But yeah, so that would be my goal for this month,
Yeah. Right on.
and then try to hit my 1,300 by the end of the year.
Yeah. I like it.
It's a big number. It's a big number. I'm so happy. I've really progressed a lot in the last year. It's really my portfolio has really grown.
I think the last 3 months of this year are going to be really good.
I'm
Yeah.
looking forward to it.
Yeah. I don't
I'm looking
know
forward.
how the market's going to go up, down, sideways, or whatever, but I think dividend wise for us, it's going to be a good 3 months for sure.
Oh, absolutely,
Finish,
absolutely.
finish the year strong. For some reason, my portfolio always seems to pop in December. I guess it's the Santa rally, right?
That
So
is true
yeah,
every year.
I always seem to make more dividends in December. So it ends the year well, and then January you kind of start off sluggish again. But that's
It always does.
okay.
It
Yeah.
always does. And just a little thing for those people that are maybe listening and are fans of the GME stock. Tomorrow is the big day for us. We're going to get our warrants tomorrow.
Oh wow.
Um, I do a little bit of a tinfoil hat. I do. I'm on Reddit. I do read it quite a bit. Not while I'm at work, obviously, in case my boss is listening. But it looks like the opening price is going to be around $13 to $13.50. I have 300 shares of it. Most of it in Simple. Some of it I have in Computer Share out of the States. So I'll get 30 warrants tomorrow, which everybody knows they're convertible. We can convert them anytime we want, but it's going to be $32. So I'm really hoping for something big to happen before October 30th of 2026. So maybe hit $100 a share, convert them at 32, make some free money.
There's no free lunch in finance, Sean. Come on now.
There never is. It's about discipline and working hard,
Yeah.
you know?
All right,
That's all.
guys. Well, I think that's probably it for tonight. And the next time Sean and I are going to be doing a video together, we're going to be on a cruise ship somewhere. Which cruise line are we taking?
We are going on the Celebrity X,
Nice.
which we're not endorsed by it,
Yeah.
but
Yeah.
we would love to be,
Sure.
in case anybody's listening.
Yeah.
But it's a great cruise ship. One of my favorite things about it is it's more of an adult crowd. I don't know if you noticed that, Paul. That when we did the one last year, there wasn't a lot of young kids on it.
No.
More adult, more established people, to put it politely, I guess. Not the big party crowd. I enjoyed it. It was a great time, and I'm really looking forward to our trip on the. I guess we set sail on the 20th.
Yeah.
Yeah, maybe we could do one from the beach in Florida before we
Oh
hit the
yeah.
ship.
That'd be all right.
Could always do that.
Yeah.
We get our wives involved this time.
Yeah. Make them do some work for a change.
Yeah.
Yeah.
That's not a bad idea.
Don't tell Tracy I said that.
I was going to say we shouldn't say that. Tracy does a ton of work for us.
Yeah.
And Anna's a huge cheerleader for us.
That's right. Yeah. My wife Tracy edits most of my videos or all my videos and creates the thumbnails and everything for us.
Yeah, and she does it for all the videos I upload to. She's amazing. She does a great job for us.
Yeah. Yeah. This is technically her fourth job. She's already got 3 jobs, so this is her 4th job. So.
That's what she needs, is a 4th job.
Exactly. All right.
Well, if she wants you to retire someday, fully just living off your investments, Paul, she needs to have this 4th job.
Yeah, that's right. Hey, I keep telling her to to take money out of her bank mutual funds and let me invest them, and then that way she wouldn't have to work as hard. But she's not quite 100% trusting me yet. She's getting there, but not quite 100%.
Paul, this sounds like another video idea.
Yeah.
Maybe we could talk about the money our wives have that they won't give us to invest for them.
Yeah.
Yeah. Anna's in the same situation. She, she has her investments with, the people, her advisor. And I keep telling her, you could be making so much more if you just move it into Wealthsimple and, self-dictate what you're going to buy, or, ask me, ask you.
Yeah.
She could be making so much more money.
Yeah, one of these days.
Yeah, well, maybe.
Let's hope.
Yeah.
All right,
Absolutely.
Sean.
All right, Paul. It's been a pleasure.
Yeah. Have a good
Enjoy
night.
the rest of your beverage.
Thank you. You as well.
Thank you, sir.
We'll talk to you later.
All right. Have a great night.
All right. Bye for now.
Bye.